Ashwini, I was just reading today a lot of reports about earnings downgrade still to continue. A lot of brokerages expecting another 5 to 10% earnings downgrade for FY19 and 20. What did you make of earnings and where India stands right now?
So, I mean, you're referring to the cover story that ran in today's newspapers where aggregate earnings in the March quarter appear to be a little disappointing compared to what the expectations were. So, I have the following sense. I think if you look at the large companies, by and large, they have delivered what they expected to deliver. Probably a lot of the disappointments is in the smaller companies. We continue to expect an industrial revival, even though the PMI reading for April was a little bit on the softer side. So we are hoping that that's a blip, and we'll continue to move ahead with all the capex that's taking place at the end of the government. I think on the financials, the earnings growth story is intact, because I think if the NCLT process stays on track, I think the financials will be able to report the kind of earnings growth that the street is forecasting. So at this point in time, am I a little concerned on earnings? Maybe yes, but would I be willing to downgrade estimates right now? The answer is no.
Okay. Ashwini, you spoke about a bit of misses in the mid-caps and small cap. Yeah. And that's where you've seen the maximum pain since the beginning of the year. Many of the stocks are down 30, 40, 50%. Is this a mean revision, so to speak, because they've rallied so hard? Or do you think there is a genuine concern now for the mid-cap and small-cap space?
I think it's a little bit of both. A little bit of mean revision taking place, and a little bit of serious concern on the quality of the companies, especially with the auditor resignations happening. I think people are seriously looking at cash flows and looking at the quality of the financials for various companies, which I think is always a good thing to do. So if the market becomes a little more sane, that's fine. But I don't see this to be a very lasting concern. I don't think, small caps were so expensive across the board that one needs to worry about the asset category per se. I think some stocks were expensive, and it's good that they are correcting, but we continue to find a lot of opportunities in the small and mid space, especially at these prices.
At the beginning of the year, a lot of commentary from the experts was India this year is a market where the macros are challenging, but the micros are improving. But that seems to be a little fading away with the numbers not coming up as to what the street was expecting. In that scenario, do we see more further downside for the Indian markets for FY18?
I don't think so. I think if you look at the micro numbers, I have to analyze some of the smaller results in great detail. But at least for the companies in our portfolio where we've tracked the earnings very, very closely, we didn't have a season which was full of disappointment.
What do you make of this challenging macros for the Indian markets? Crude at almost 75, 76, rupee at 68. Those are likely to be major headwinds for the Indian equity markets. In that context, how are you mapping up the markets for now?
I think crude oil is very hard to predict, and there's a lot of research out there which says that it shouldn't go up a lot higher from here. Some research says that it will go up a lot higher from here. So I really don't know, because the supply dynamics are very, very hard to predict, and it's a supply side issue. It's not a demand-led issue. So how the politics around oil will shape up, how much new production will come online, that's something I can't say, and it is a risk for India. If oil were to go to $80, we do have a problem. I think the rupee has finally found a reasonable level after being too expensive for most of 2017, so I'm not too worried on the rupee. I think on the liquidity side and on interest rate, again, I'm not too worried. I think where the problem arises for the market is the flows. The flows have been consistently negative from foreign investors, both in fixed income and in equities. And for the market to stabilize, we need to see a reversal in that.
Any word on PSU banks? Because there are a whole host of reports again doing the rounds of a possible merger or selling the weaker bank NPS to the larger banks. Any idea on the PSU bank space?
So the part that is very hard to forecast is what the government will do at a policy level, in the sense that if they ask two PSU banks to merge, or if they force the sale of NPLs from one PSU to another. I'm just hoping that common sense prevails, in the sense that mergers which are not practical don't happen. Correct. Sale of bad assets from one firm to another firm don't happen, so they take down a good firm. Overall, again, NCLT resolution is a big piece of that arithmetic. If the NCLT resolutions happen, then some of the PSU banks can actually surprise a lot on the upside. So I'm hoping to see that through the course of this year.
We also caught up with Prashant Khemka of White Oak. He's got a rich experience of earlier managing as a global CIO of Goldman Sachs, and he's now joining me from the sidelines of the Sohn conference. Prashant, thank you very much for talking to CNBC. First, a word on the mid-cap carnage. We've seen good quality mid-caps correcting 40, 50, 60% from the peak levels. Is this just a mean reversion, or do you think there is serious damage still left in the mid-cap and small-cap?
See, I think individually stock-specific, you've seen a lot of correction. But on the whole, mid-cap index, if you see BSE mid-cap or so, is down double digits, about 12 to 15%. So I think it's a greater distinction being made between better mid-caps and not so good mid-caps. So last year there was a tidal wave that lifted the entire mid-cap and small-cap spectrum, and now there's greater distillation and distinction being made, and those that did not weren't worthy of being where they were last year, huge rallies of 50, 100, 200%, they are coming back to their natural levels. But on the other hand, you've had many mid-caps which have done very well. And hence you have an index level which is down only double digits, despite many of the mid-caps being down 40, 50%. Because there are others that are positive. So I think this year there's a greater discretion, greater analysis being applied to which stocks merit to be where they should be.
Okay. Prashant, one of the reasons attributed to this mid-cap fall is the so-called risk of auditors resigning. In fact, in a presentation, you've said unusual risk, which is the auditors resigning. Is that...
It's become more of a usual risk than unusual risk now.
So is that going to be a concern in the mid-cap and small-cap for money managers like you, that you have to be now more worried about the auditor's profile and the auditor's comments as well?
See, I would say auditors is more of a reflection of reality. Some of the auditors either qualifying the statements or resigning, that's more of a reflection of reality that existed for a long time, but maybe right now there is a greater appreciation and greater realization of those risks given what the market is. But merely an auditor's statement or auditor's resignation doesn't change the reality per se. So if one has done the work properly on the financials and on the reality in the first place, then even if the auditor were to resign on some kind of genuine reason, should not affect the stock prices, is our view.
Within your portfolio, Prashant, have you seen too much of a pain in terms of earnings getting downgraded, or you're still confident that at least in your portfolio companies, you have got some of the IT names, mid-cap IT names or the consumption names, there at least the earning growth is likely to continue?
So Nimesh, as you very well know, over the last 5 to 7 years, like clockwork, every year the earnings are getting downgraded for the future years. At the beginning of the year, be it buy side or sell side, everyone has, from I would say several, not just several years, I would say past couple of decades, everyone has a earnings growth somewhere around 15%.
More than
15 or more than 20, depending on, more than 15 depending on what the markets are doing.
Correct.
And as the year progresses, it comes to mid-single digits. So in a year where earnings are not downgraded, that would be a major surprise. I would say the magnitude of downgrades is what you have to look at now. The magnitudes of downgrade, in my sense, are coming down. And the earnings growth trajectory is improving.
Without naming individual names, tell us what are the opportunities that you foresee in some certain sectors, because I believe you gave a consumer idea at the Sohn event today, but broadly speaking, where you think, which are the pockets you think which will give good opportunities?
So let me talk about a few areas where we are not finding opportunities, and some areas where we are finding opportunities. So consistent with my longer term past history, I've always struggled to find good opportunities amongst government owned companies. Not saying never, have never found, and never say never, but at this point struggling to find good investment opportunities in government owned companies, and hence sectors where government ownership is dominant. There we not an avoid, but we've struggled to find. We continue to look for opportunities, but in energy sector we are not finding any opportunities at this time. In utilities, not finding. Telecoms and PSU, obviously government-owned banks, have not found any decent opportunity in a long time, and so those remain, areas where we don't find. So domestic opportunities in consumer, financials, whereas in exports, materials, particularly in chemicals, as well as in IT and pharma as well, we continue to find very attractive opportunities. Pharma, not necessarily the US, the generic company space, but more in the contract manufacturing and research.
That's it. So you heard from some of the biggest investment managers on their investment ideas, their market outlook, the pain in the mid-cap and small cap, and what to expect in the years to come.